Recently, House Majority Whip Tom Emmer introduced an anti-CBDC, central bank digital currency bill, in the House to stop the Federal Reserve from being able to issue a central bank digital currency that would be given to retail people such as ourselves. But is this bill really going to stop a CBDC? What's it really entail? That's something we need to look more into. We're hearing a lot of news out there about it, but it's more than what is being told to us. Let's take a look at that today in DeFi IoT. What I want to do is I'm going to jump right in, put these 3 links down below for you too, so you can look at them yourself. We'll jump right in and look at, well, here's the Breitbart break, and it's out in other news, but on Twitter, Emmer issues out a few days ago. Today I introduced the CBDC Anti-Surveillance State Act to halt efforts to unelected bureaucrats in Washington, D.C. from stripping Americans of their right to financial privacy. And then he shows on this tweet that the actual, you can go on and download the whole bill. But when you start looking more into the bill, you'll see that he's really trying to curtail, and I'm just going to give a brief breakdown of this, and you can read it for yourselves. I'll put the 3 links down below. Before we go any further, do me a favor, though, so we can get this information out to the people and help us support our channel. I'm grateful for you listening to us today. Because subscribe to the channel. If you haven't subscribed yet, take care of your subscription, please. It's a free subscription, and we make efforts to bring you facts, not just opinion. And we will put the links always and back our facts with evidence. So, Tom Emmer, back in January, he introduced a bill and started talking about this bill. You had other Republicans, Texas Republicans, Ted Cruz, kind of jump on board, kind of working with him. And so there was a collective gathering of some of the Republicans coming forward to introduce this anti-central bank digital currency bill. The people are scared of it. Everybody I speak to doesn't want it. However, we have to understand something before I even go forward in this. This bill, great that is proposed, great that we're seeing congressmen actually working on our behalf, but would this bill really be able to have weight? Let's weigh this out. You have the BRICS nations, right? Brazil, Russia, India, China, and South Africa, right? You have these nations coming together with the OPEC nations now, all leaning towards bracing to disconnect the dollar from the petro world, from oil, right? And that's really what gives the dollar its buoyancy now. It makes it the global currency. We're at a time frame when global currencies usually are replaced because we're kind of in that revolutionary state as it is. And you had the digital yuan that was issued last year by China with a backing of gold. The US dollar has no backing to it. Remember, in 1971, we went off the gold standards, which is paper with the confidence of the US government. Well, that confidence, especially over the last couple of years, has been eroded greatly, if not completely. Even there's recommendations on not even holding long-term bonds with the U.S. government. The U.S. government just keeps recreating more money, printing more money. 80% of the whole cash flow of dollars that existed have been created over the last 2 years, prior to that. So in competition going forward, a central bank digital currency would need to exist to back Russia's digital ruble, which would be backed by gold. See, the central banks are buying up the gold and silver in the world right now. People don't realize that. They're buying it more so right now, including our own central bank of the Federal Reserve here in the United States of America, are buying up gold and silver more than they've done in nearly 50 years. Remember, we go back 50 years, though, we were on the gold standard, so they bought it up then to hold and back that gold. Well, since then, there has not been this kind of a buy-up of gold and silver. Why? Because they want to back their digital currency. Now, let's break this down a bit. So, this is nice that Congressman Emmer's bill is being introduced. Shows something. But he's not saying anything about a commercial CBDC. In other words, the banks can use it. He's trying to say that it will violate our privacy rights And he used Canada as an example of what just took place, even with the currency. And he explains that a CBDC is nothing more than really a digital fiat currency, right? Like a dollar. But the dollar won't, the paper money won't exist anymore. First of all, the U.S. is in competition with all this technology going forward. Now, this is blockchain, and I've been telling everybody that blockchain is here. We need to learn what it is. The state of California is going blockchain with DMV in other aspects. You're going to talk about now other states adapting blockchain to track your mileage on your vehicle because gas taxes will no longer be able to be collected in these states that are going to be eliminating gas vehicles. So they're now moving toward the blockchain. These are all third parties. So what this bill really introduces is that the Federal Reserve cannot issue a retail CBDC. It has to be done by a third party. Like Tezos is done with DMV. DMV exists and you have a third party. Well, that's even more dangerous. Remember something. Down in Ecuador, for example, they have electric companies called ML Norte, right? And ML Norte acts as if they are the ones that control all the electricity and the grids and so forth of that nature. But behind the strings is the government that tells them what to do. It's kind of like the Federal Reserve today in the United States of America. You can say, well, that's not a government entity. Well, at the end of the day, the government can fire everybody, hold them all liable, sue them all, right? They can. And so at the end of the day, who has the final control? And that's exactly what we're coming down to, like what you just saw with the LDS Church and the SEC come in and saying that they had these different corporations broken down in different LLCs, but they were all controlled by the same people at the end of the day. It's the same thing. Good for them, and they come out and fine the LDS Church and their affiliate asset management company $5 million. Well, that's a whole other video I'm going to get into. But it works for them, but we can't do that, you see. So what we're talking about really is the same thing. It's really not going to prevent anything. And I think it's just lip service for these representatives going in there and saying, hey, we don't like this. But yet there's really no other option for America but to go with CBDC. Now, I would love for us not to go that way. We can maintain our independence and our privacy. But do you think that's what 5G was created for? 5G is not for commercial use. It's for government use primarily. Now, commercial use, but big companies that are in bed with the governments, especially the U.S. government. So I just want to go on here and explain something. I want to read here what is being said here. So yesterday, Republican Congressman Tom Emmer introduced the CBDC Anti-Surveillance State Act. Emmer said, the aim is to prevent the unelected bureaucrats from stripping Americans of their right to financial privacy. Most will appreciate Emmer's objective. However, the bill might need to be longer than 3 succinct pages to achieve the aim. See, it's just a brief bill. And basically it just says the Federal Reserve cannot open bank accounts for retail people, you and I, for the public, right? They can't because that's a breach of our privacy. But it doesn't say anything about being a commercial CBDC. And it talks about blockchain. It talks about how it goes on to argue that, hey, it needs to be a decentralized blockchain and a third party. Well, that third party is susceptible to do whatever it wants to do, like I explained to you with the ML Norte in the government in Ecuador, and that third party is really going to be controlled. So it's really not better. It's actually worse because you're not dealing directly with, and they will still get the information because they're already passing other laws now, other legislations on the table now that will force financial institutions, all types of financial institutions, to turn over, including your personal bank account that has anything over $600 in it, to turn over to the IRS any information of any transaction that you and I do so that the government, the IRS, can review that. So at the end of the day, if it's a third party, it's still going to turn over any movement that we do and use, right? And it's still going to be something that's controlled and monitored. It just won't be the government exactly, kind of like the Federal Reserve, right? It just won't be the government exactly, but yet it's still controlled by the government. So this bill really doesn't take it off the table. It looks good. It sounds good. See, the document blocks the Federal Reserve from issuing a central bank digital currency directly to consumers or allowing individuals to hold an account directly with the central bank. That means a digital dollar would have to go via intermediaries and favors a token-based CBDC. See? The bill was enacted, if it's enacted, it's still conceivable that intermediaries such as banks could be required to share personal data with the central bank. That's already another bill that's being enacted by other legislators right now. So it's kind of going around us. However, the Federal Reserve has stated that it aims to ensure privacy. The central bank still would likely require banks to implement the anti-money laundering processes. And there it is. That's at $600. If any amount over $600 is there, you have to record it. And that's going to be required even of crypto platforms. So, in conclusion, Amber basically goes on to say that, I'm introducing a bill to prohibit the Federal Reserve from issuing a central bank. He issued this back in January 12th. So this has been ongoing. So it finally was presented this week. As other countries like China develop CBDCs that fundamentally omit the benefits and protections of cash, it's more important than ever to ensure the United States digital currency policy protects financial privacy, right? Maintains a dollar dominance and cultivates innovation. CBDCs that fail to adhere to these three basic principles could enable the entity like the Federal Reserve to mobilize itself into a retail bank, collect personal identifiable information on its users, and track their transactions. You put it with a third party, it's the same thing. Because now there's other laws are going to go in and say, hey, you got to report everybody over $600. They have any movement over $600. Not only would this CBDC model centralize Americans' financial information, but leave it vulnerable to attack. Even with a third party, it's vulnerable for attack. And you're talking about, if it's completely decentralized, then the government would have if it's a pre-programmed algorithm, it's a software, that's a different story. And that could work, right? That's basically a digital currency. That's a cryptocurrency, is what it would be. It'd just be used as cryptocurrency, be made a legal tender. But you had recently come out, the IMF, saying that, hey, all countries, please do not legalize or recognize crypto as a type of currency. So now you have laws coming down, being mandated from above, asking countries to not recognize. Why? Because they have 110 countries right now on board for central bank digital currencies, and a cryptocurrency, a decentralized cryptocurrency, is competition against that currency. So, or against the digital currency, a CBDC. I'm just going to say this in conclusion. Requiring users to open up an account with the Fed, access to U.S. CBDC would put the Fed on an insidious path akin to China's digital authoritarianism. And that's exactly what's taking place. And we've seen that over the last 2 years. Now, in order to maintain the dollar status of the world's reserve currency in a digital age, it's important that the United States lead with posture that prioritizes innovation and does not aim to compete with the private sector. Decentralized blockchain is private sector. So, what he's going to talk about here, in brief, I'll put these links down below. You can look at it yourself. Here's the thing. I've been listening to people. I read this morning in Cointelegraph. I've heard other two. They were talking about, hey, there's law coming out that's could be anti-CBDC, etc., etc. Look, at the bottom line, end of the day, it's still a CBDC. It's just done by a third party, which makes it even worse because now the government has an excuse to say, hey, we didn't know anything about it. Like with Pfizer, right? We didn't know that. We didn't know what they were doing. That was them. But the whole time they know what they're doing. And they just put the blame. That's how the game is played when you move along this agenda. I've lived on this for 20 years. Mark my word. Give us a thumbs up. And subscribe, please. Make sure your subscription is up to date on this channel. Because I will bring you the facts and put the evidences down below. See you in our next video.